The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this very first day of August. It's August the 1st, Thursday, and we're looking at the Dow down 54 at 40,788. A very sharp moves up. That high that was made at 41,376.00, that round number high, that's been there for a while, and that's really important. That's the power of round numbers as far as I'm concerned. But the weekly chart is still pretty darn strong. Actually, the daily is still strong. So is the weekly, so is the monthly. We started a new month with a leg E, within 2 sessions, that's 2 months, we went to a new higher high, and that becomes a potential Chapman wave instant restart. Now, one of the things about the instant restart is the speed and the power of this move leg E, which could be an alternate count, and where it closes is really important. If it's very close to that peak D top, then you say, okay, a really good chance there's an instant restart, and that could be E/A, and that we are not going to take out the low that was made, and that was, I think, at 37,005 something. Let me give you the exact number. That was in April at 37,611. But at the same time, as long as all these technicals are strong, and they are very strong, even the stochastics at 87%, on-balance volumes are tad overbought in the monthly, tad overbought in the weekly, tad overbought in the daily, but the price is the price, and the price is holding very nicely as those 914s are all very strong. So that says in the entire month of August, if there is a move to 41,376.01, just 0.01 higher than the July's high, that extends leg E, and that is a very positive aspect, and it says it could actually accelerate to higher highs. If it stalls, and we were so close, look, yesterday we went to a high, look, 41,376 was the high on the 18th of August, 41,096.66 was the high of yesterday. That's just an eye blink away from an all-time high. So I don't see any reason why we can't assume. Remember, assuming means that you're trying to do an analysis that projects out. Now, the Fed never does that. The Fed always looks at history. They don't want to project out. They say if this and if that, but we aren't anticipating it. It has to be done. I'm saying I am anticipating that there's going to be a higher high in August above the 41,376.00 level in the Dow, and that's going to extend the move in the monthly to say we're continuing leg E all the way through August. Okay, now let's do the same thing with the S&P. Monthly candle, not a bad candle, not very strong, but it made an all-time high. It broke above the Chapman wave, very long-term, going back to the 666.6. This goes back to the low of the Monday, the 9th of March 2009. Remember, on the Friday, we went long the diamonds, and the S&P only made its low the following session, which was the Monday. What I'm looking at here is that this inside track repellent zone, the green, tiny little mini channel of green and pink trend lines that goes way back, that's going to be very important, because if there is a close above this, that's one thing. But if there's a close in the 60, what did I say it was the other day? I think 66.60. Yeah, you really want to be quite high. So 50, we're at 55.39. If there is a close on a weekly basis in August above, I'm going to be a little conservative. I'm going to say above 57, I'm going to make it 5,800. Above 5,800, that's a long way to go. It's 2,500 points in the Dow. It's 25 points in the S&P or so. That's going to be really impressive. So let's go one step at a time. And the step here says that within the context of the daily, weekly, monthly charts, in the S&P, what we're looking at is, let's move this over right there. We're looking at this trend line holding, and the 9 to, it turns out I don't like to use lower trend lines when I've got the 9 and 14 period moving average. It's just messy. But I am going to do this for now because I know a lot of people do use trend lines, and I'm going to put this in so that you can do the homework together with me. You see it? If I call it, it's just going to get messy, but I'm going to do it. This is the inside track. So we had the inside track repellent zone in the monthly chart. That is a huge one, very long term. This is more short term, shorter term, not short term because it goes all the way back to 2023. You'll see it's now. You see how messy it is, but there it held beautifully. The two. I could have made this easy and said, look, it held the 40-period moving average. Let's move on. But I like to do things thoroughly, and that says this is the propellant zone. So that says that if the daily pink 9-period moving average, which is under the 14-period moving average, in the next, I'd say 3 to 5 sessions, is able to close green, then there's a chance that the next level, the high that was made on the 23rd of July in the S&P of 55, 85, 34 will be tackled. And if that's tackled, then the next high will be the gap, this whole gap in the 5640s, but actually 5669.67 is the all-time high. We could head there, and you can see it's already broken the Chapman falling axe formation. That's like a declining, expanding cone, like that. Like that. It's broken it. That means that I can put in as a gesture that if it takes out the left side high on the left that I spoke about a moment ago, the 55, 590s, I think it was, then we can start to look at the cup formation. That is the potential. There is also the potential of a peak A failure, a dreaded H pattern, and that says that by Friday, no, Friday's tomorrow, by Tuesday, the S&P is trading under 54.88. We'll see. In the meantime, all the signs are saying the 9-period moving average is important, but where we closed today, and now the Dow's down 127. So we were anticipating some kind of weakness today, and I said a mixed session with the techs holding up better, but the Russell 2000 probably pulling back as well as the Dow. So what I've done for subscribers from opening call is we've got core positions. Within that, we've got trading positions, and we're taking pride 3%, 4%, 6%, 1%. We're just taking money off the table. It's a little bit active. You don't have to be active, but I'm making it active. And the reason being is that I think in a sense we're getting kind of toppy. Now that's a contradiction of all the terms that I'm looking at here while I'm saying the 9-14 moving average, positive action in the daily down, the weekly down. But I'm just doing this one step at a time. I'm saying because you've got a rotation, let's just go straight to the SMHs. See, the SMHs are down 2.85 after a spectacular move from the low in the 228-ish area, going all the way to a high yesterday in the 248s, and today it's at 243.78. That's a nice bounce. But look, the technicals, all the technicals are still very weak in the semiconductors. So I'm considering that this is a rotational market, and we've got to go sector by sector. I'll be right back in a moment. Look at Microsoft, how fantastically it's doing today.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So I wanted to show the 1, 5, and 10-minute charts of the S&P E-mini. So it went to a peak D. Remember, that's the objective of the chart wave, is to get you to at least a D, the fourth highest peak, and then other things can happen. When it went to a D at the high of 5,600.75. And then the MACD turned down, the stochastic turned down, the on-balance volume turned down, but that 9-period moving average was strong. And remember, this is what we look at in the moving average of 914, that sometimes it takes a little while. It makes a little M-shaped formation, and then finally it turns down. The daily took out the 200-period exponential moving average of 55.85 support and is now down at the 65 level. The weekly chart, the middle one, I usually go daily, weekly, monthly. This is 1 minute, 5 minute, 10 minute. The 10-minute chart had a peak E and has come down very sharply. And just this moment, it's gone to an S, meaning the 914 has gone down. So the question is this a leg E in the 5-minute chart? So I know this is what I usually do in my Friday session where I talk about this is like insider trading. This is the technical aspect of the Chapman wave methodology, but I'm going to do this right now. So let me just get rid of this because it's messy. The little fib number doesn't mean anything anymore. And what we've got is it goes through a peak D right here at about 828 or 830, 835. Just after the economic news, and that was really good news. Let me just see if I can find Fletch put it into the den earlier on. Did I just jump the gun? Yeah. Oh, there it is. So he typed in, breaking U.S. macro. Let me try to move that out the way. Macro data released. Initial jobless claims 249K versus 236,000 estimate. Previous was 235. That's a 10, 12, 14,000 bump up. Unit labor costs, quarter over quarter, 0.9% versus 1.7 estimated. Previous was 4. I mean, that's important to monitor. Maybe it's not that good for the economy, but it's good for what the Fed is looking at. ISM manufacturing PMI will be released at 10. I don't know what it was at 10. So let's just see. Have I got anything here? Anybody telling me anything at 10 o'clock? Let's see, 10. This is at 10. DAX, no, nobody said anything. All right. So I don't know what the latest release, economic release is, but it doesn't really matter because you can tell that the market is looking ahead, and what it's saying is that there is some economic weakness that we've got to respect. All right, now let's put this together. This is the 5-minute E-mini. There was a move to the 200-period moving average after that peak D. And then there was a sudden spike up. And what I always say in the Chapman methodology, the economic reports or the earnings reports, anything that is market sensitive that comes out as a news event can spike up or down, and then there's a reversal. Well, lo and behold, we got a spike up, and I said that can't be a peak E. Why cannot it be a peak E? Because the starting point of the previous buy signal to buy mode was at 55.77.25 at 6:25 this morning. Well, this spike to the downside at 9:30 when the market opened went to the 5572.75 level lower. That means that is an isolated Eiffel Tower, appropriate with the games going on now in France, spike up and spike down, peak A and becomes a peak A minus. That is where that fails. And that's where you expect if it's going to fail. This is the kind of thing you'd look at. The fact that it took out this left side low was very negative and said you could get a 1-to-1 to the downside, meaning that the 55.54, 55.52 area could be a target. But it went right through the 200-period moving average of the 10-minute chart at 5560. That becomes short-term resistance. Okay? So all the signs here were that the 9-period moving average gave you a fantastic move to the upside, and now it's in the 10-minute chart, and now it's moved to the downside. Okay. Now what we've got to do is I want to run these things. Let's see where it is right now. So here we go. The Dow is down $100 and almost $200. Starting to fail with a right arm shoulder failure pattern in the price, but the price is still way over the 914 moving averages, and the MACD is still barely positive, but it is positive. Stochastics weak at 62. It's worried me a little bit, and the on-balance volume is overbought. Weekly chart still good. S&P. Let's go to the S&P right now. The S&P is down 374. It was up at the 55.66 level. Now it's at 55.18. That's a sharp give back. And I'm not ruling out that we've got some short-term weakness that could impact the areas that were very strong over the last couple of days. And what we're looking at here is that at 55.19 in the S&P, this is a peak A. I'm going to watch it closely because if it goes under 55.82, that's a long way down, but it was a long way down from where it was up this morning. That's going to be a big negative over the next few days. Remember, I was talking about the inside track propellant zone, but you've really got 54.03, which is the 9-period exponential moving average on the weekly chart. That's imperative to hold. Okay, let's go to the QQQ. A fabulous gain. Now it's a loss. 470.90 could turn into a peak A minus if it fails and takes out the low of 3 days ago, and that was at 466. No, 454.15. 454.15. Let me type that in. 454.15. Okay, so that's a trough A. Oh, I didn't finish that up. I wanted to do it and I never did. I can do it now. C, D. But I've got questions that I need to answer, so let me get to that. And you can see this trend line. Now, these trend lines, they're just trend lines. I mean, it's not the end of the world, because especially when they're long-term time alone sometimes can take out a long-term trend line. But look at this. You've got this trend line right here. I'm just joining them. And I'm saying, woohoo, the week is young, but we've already this week gone below at 455.15, below this trend line. I could also make the trend line from there to there, so it would go down to maybe here. It'll be at about 442. Doesn't matter. What we're looking at is that this QQQ rally that was very sharp, a decline that was very sharp, going from the high of 503.52 around about the 15th of July, took a 50-point decline. That's what, 13%. And now it's at a pretty good rally, but that 9-period moving average is still very weak. Now let's go to the IWM. IWM has been the bellwether, the star, and this point has made us double top at 5226.64 on the left side back in mid-July. And then yesterday, the last day of July, went to 228.63, and it closed way underneath that high that was made back around the 15th or 16th, and it's a big red candle. So I believe, I hope that we've been taken out of our, yes. So I believe that, or maybe not, but we've got very tight stops. We've taken some profits in our very short-term trade, and we've got our core long positions in the IWM, Russell 2000. But I'm respecting August action. The next few days of August are going to be really important. I'll be back. Dow's down 205. S&P's up 2.80. Big divergence. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until August 1st, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred, and they never expire. If you want to receive a 20, 30, or even a 40% bonus from purchasing Tiger Dollars, now is your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until August 1st, so lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So the semiconductor index is down 550 at 241.49 after a spectacular move yesterday. So this hasn't taken out yesterday's low, but I'm going to be monitoring this very carefully because what I had said the other day is that in my left side, right side price time match, I had this low that was down at the, let me just get it right there, at the 228.62 level on the 17th of May as a test. Well, we did it in a shorter period of time, 3 sessions ago. We went to 228.33. Hey, not bad, huh? And then it had a very big spike, but we haven't made a higher high today, but we haven't yet made a lower low. It looks like it's going to try to make that lower low, and that's going to be a lower low than yesterday's low. What happens is that weekly chart is showing you the semiconductors have had a pretty severe doji candle high at peak D, 283.07 in the weekly chart. Huge red candle, followed by another red candle, and that's a weekly chart, and the week hasn't finished, but it so far is a red candle. And that just says that there's a chance that 914 period moving average, if it turns pink at the close of next week, that suggests that you can go all the way down to the 218, 212 area. But if it deflects higher, for some reason, if next week there is buying, it comes in again, and the semiconductors can go to 242 or higher, 240.60 right now, not 242, I want 252 or higher, that is going to help a lot in seeing this deflection of the green 9-period moving average, how important it is to go back up again, even not getting close to crossing negative. So this is the way I'm looking at it. I said to subscribers, we didn't go back into a short position on the SOXS, that's the 3-time short. I wanted to see if we was able to test the 14-period exponential moving average in the 247s, so that maybe we get a leg A, and then it goes to an A minus because it starts to really tank its dreaded H. Another one of those patterns that it's been doing ever since the high of 283.07. There's an H pattern right here. There's an H pattern right here. And this could be a bigger one. We'll see. But in the meantime, the fact that it did rally was really important. The fact that it was oversold. Now I'm going to go back to Microsoft. Microsoft had this left side, right side price tie match to this gap right here. That was the gap of around about the June the 3rd or something, June the 5th of 418.30, and it went down to 412.21 and closed at 418.35. That was a good sign. So that bounce zone is anticipating. Yesterday I said, let's see if it holds. It might just be more that we've already seen a tremendous amount of the selling pressure. The whole move up from the 31st of May in Microsoft to 468.15, and then with that round number open at 467, 2 sessions later, and it just kept tumbling. That says that maybe a chunk of the move down in Microsoft has been accomplished. Now it should have a relief rally. But I'm not ruling out that it's going to be a failure pattern. And if that failure comes to pass, the 404.51 low of the 31st of May has the 7th of August. Let me just see what the date is, 7th of August. Whereas I'm going to say all the way to the 9th. All the way to the 9th, but the measurement says 7th of August, plus the Chapman wave inside wedge target support line held beautifully 2 days ago for the bounce, and that's now at 410. So I'm watching this very closely because the semiconductors, my rule of thumb is that they lead the market up, they lead the market down, but every once in a while you get this conflagration between one sector playing catch up or trying to lead, and other sectors that have already done well taking a breather. And this is more than a breather in the weekly chart in Microsoft. That is a pretty big pullback. 468 down to yesterday's low in the 412s. That's a big move, right? 13% or so. But if you look at the monthly chart, it's just saying, hey, got an instant restart. 1, 2, 3. Yes, instant restart potential, but it was a much higher leg E. So maybe you need to digest this gain, maybe even another month, maybe all of August. Microsoft doesn't come close to the 468.15 level. Maybe all of August, this SMHs don't get close to not the 283.07 high, but maybe the 261 259 to 261 resistance. That's kind of how I'm looking at it, and it's isolated sectors that are really doing well. Okay, now it's GDX. GDX right now is trading down 51 at 37.42. Had a very nice spike. There's a dreaded H at that A minus, comes back down. Peak A, this is a gray leg B on the upside, gray leg B. Good action, not great, just good action. And the weekly chart says, hey, this is more than good. This is very good action, holding above the 9-period moving average, and the 90 is way over the 14. The MACD is good. Stochastic's not great. It's a 74% on-bounds volume, not great. But look at the price. So it's holding well and has had a couple of months now to go out of the inside track repellent zone in the monthly chart. And here it is in leg D. And that's very good action. All right, so that's that. I just wanted to do silver. Silver was running just a little bit earlier on. Now it's down 16 cents at 28.77. Now it's struggling. Remember before, gold was looking good, silver was not. Silver then took off and was looking really good, and gold was looking lousy. And then gold caught up, and then they both had a rally together. Now they're both taking a breather. But at the same time, silver technically is weaker than the Dow. It did do the 1-to-1 to the downside with that move to the 200-period exponential moving average of 27.49. So it has bounced off that, but there's a lot of work to get the pink 9-period moving average positive. It's got a high-grade copper. Spectacular move yesterday, a lousy move today. And that was, I was warning. So let's see, FCX, so copper is down 0.6 at 4.11. FCX, I said yesterday, just be real careful. You want to get in, you could tiptoe. It needs a lot of proof for me to say that it's turned the corner. Let's see where it is right now. Down $1.11 at 44.30, giving back a chunk of the gain. So I had said use that, the low of the day, as a stop if you're even going to get in for a bounce. So it would have been just a very brief moment. And now what we're looking at is it's acting very weak. And that 200-period moving average I was warning about has become resistance at 45.18. And the 3-4 foreign FCX is trading at 44.36, down 1.05. Basil Chapman, Tiger Technicians Hour. I got to get you some questions right now. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Otherwise, we're back. The S&P is now down 21 at 55.37. That's the E-mini. Gone right through the 200-period moving average. The next level of support that I can see was this trend line I drew in way back. If I can actually read what it says. Where is it? Oh, it's right there. It says 50. Wow, hard to read. Let me just move this over here and I'll be able to do it. There it is. So it's right on that line. 55.34. 55.34 is the next. That's a trend line that I had from way back. It was one of those long rectangle formations that became important at a certain point. And it often, I put it in as a horizontal trend line. It just sits there until one day you come back to it. Now, I don't know if we're coming back to it, but it's sitting there, all right? And we're at 55.39, so it's not too far away. Okay, so within that context, this is what I wanted to show you. So questions came in. One was rely, R-E-L-Y. Oops, is the wrong chart. I wanted ESU24. Let's go back. Sorry, I wanted it on this chart right here, daily chart right there. So where do I think Rely is going to go to? Rely is Remitly Global Inc. I just can't remember what it was. I remember it was an IPO up in the 50-something area. What was that IPO high? I think it was the day it came out. It soared to the upside, and then it went to 53.65, and then it dropped month after month after month until in June, I believe it was. Is that June? Yeah. So we've got, hey, come on. There, May. May, it goes to $6.66, and then as a screamer of a move to the 200-period moving average of the monthly chart of 26 in the 26 area, goes to 27.95, comes back down and pulls back. Now I can't remember what Remitly does. Maybe it's to some financial institution. I could look it up right now, but I'm just looking at the chart. It must have had good news today. Oh, is that why you're asking me? I would stay away from this for now. When it gapped up, it opened at 1502, hit 1508. It's trading right now at 13.81. Give it a little time. I do think it's turned the corner on the weekly chart, but it needs a lot of work. And that daily chart has to get back above today's high of 1508. It needs to get to 1527. It has to be in the 15s and hold there for about 2-3 days. And then I'm going to say to you, right, this is the move that's going to take that pink 9-period moving average to green, but it's not going to do that until it gets to the 16s. But you haven't got that right now. And the fact that it gave it all up, it hasn't given it all up, it hasn't gone to yesterday's price, but it is a huge move down from 1508. It's now only up 58 cents at 13.79. Just be careful. So where's the support? Let's see what happens if it tests 13.23 to 12. I'll just call it 12.90. That's the area. Give me a yell. We'll look at it together. Next one was, isn't that interesting? Elio in the den asked for race, RACE. This is Ferrari. I actually looked at this because I saw it came up on the, I don't know if it's still there. Let me just see. No, it was probably has given it back. But it was right here on the list, right in the back here. Let me move this way. You'll see tucked away is my big percentage movers. I don't know if it's still there. It was there earlier on, so I looked at it. I didn't do anything with it because my impression is that Ferrari is in a special category, and it doesn't tell me as much about the markets until it makes all-time highs. Then I have to monitor it closely. But I was down the Kennedy Greenway. That's in Boston. That's where the big dig was, and then they covered up by putting in just a number of things. The plans that they had, they didn't quite fulfill, but they've done a really nice job anyway. And it's just a nice walkway, and they have arts and crafts fairs and food trucks and stuff there. Anyway, it's really nice. We were there the other day, a Saturday morning, whatever it was. And I'm looking around, what's going on around here? There were 5 youths, as Mr. Pesci would say, and in Ferraris. And then the 6th one comes along, all in this bright color, yellow and green and red Ferraris, and making a lot of noise. And I'm not one that I cannot talk about noise when it comes to these things. As a youth, on my little motorbike, I used to, when every once in a while when the muffler gave in, I would still keep riding it. And it was, my poor parents, they could hear me coming back at 11 o'clock at night or something on a Friday night party. And you could hear that bike coming. Anyway, they felt good about hearing me come home. At least I was coming home. But yeah, so I shouldn't have said anything about the noise, but it was crisp, and it kept me wide awake. So the most important thing about this Ferrari scene is that they were young guys. I think they were guys. It was hard to see because they were in a group, but they were just kind of doing their stuff. You know what young people do, but they were making a lot of noise. And but they had cars that cost a lot of money. I mean, I'm not sure exactly the models that they had. They looked to me the top of the line models, and they were young guys. So maybe they trade futures together. I don't know, whatever it is. But that just said to me, there's something very different about the era that I grew up in and this era. It is just so different. And a part of it is that we've really had, since the 1930s, we've really had, just if you look at the market, it's just been a market that's gone higher and higher and higher and higher. And therefore, the level of affluence is one thing, but the amount of money that people spend on showing off a particular whatever it is, that could be very expensive. I think this is this is really up there. This has to be, on a percentage basis, one of the highest levels we've seen in a long time. And I think it's going to get worse, meaning it's going to get grander as the months go by. Anyway, with that said, that's Ferrari. Big move up. Gave us some of it back. I'll talk about it. It's got a range between 440 and 390.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let's see now. What we're looking at is the Ferrari is up 597 at 18.98. And basically, we're looking at a rectangle formation. It's really a cup formation. And it says, if correct with this particular pattern, as long as 400 holds, there's a chance that Ferrari, race is a symbol, could hit the high of that two-bar reversal right there at 442.80. Yeah, by the August the 3rd, the week of the 30th. All right, let's see what happens. Okay, so a couple of things that we need to talk about. Now the Dow is down 351. This is really interesting because all the add-on positions that we have taken profits, but have also had the core stop either very close to the entry point or just a little under it, just to give it a little room. And now what we've got is that the Dow has gone back to the 9-period exponential moving average. And this pattern can actually continue for a while. This cup formation could turn into, I'll draw it in, into a U-shaped pattern while it's waiting to try to either take out the left side low, and that's in the 38.30 right there, 38,800s, or we're looking at trying to get back to the highs. So Dow digesting gains. S&P, Dow has 40,290 as key support right now, daily chart. Short term, down 28 now in the S&P. That has 54, I would say 86 on the daily chart as key support. The weekly chart we'll deal with tomorrow. Looking at the QQQ, we've got key support is at 467. I'd say right now 462 is going to be really important support to hold. IWM, big pullback. That's under the 452 average of 218.27. It has 216.35, I'd say, is key support. Hey, have a great rest of the day, and I will see you tomorrow. Check out my opening all day newsletter. Thank you for Steve Rhodes.